What is going on, family? It is your favorite uncle cousin, Tyrone Gregory, in the building, joined by a very, very special guest in the building. You know her as the Little CPA, man, and it has been a long time coming. I appreciate her being here. She's been down with the fam. She's sending us love. If you've ever followed her on social media, her posts are on point. And she's an actual, right? It's in the name, a CPA, an actual. She went through, took that grueling test, passed. Here she is. And you've been in the game for how long now?
10 years.
10 years. 10 years. Yes. So before we get into the content, let's go ahead, skip to the video. We come back, we're going to be talking about nonprofits. The beautiful business of nonprofits, right? That is her area of expertise. So we'll be back right after this. All righty, fam, here we are again. Thank you for joining us. Here with me, Miss Williams, the Little CPA. How about you introduce yourself to the family?
Okay, so thank you, Tyrone, for inviting me. It has been a long time coming. He is a great referral. I send so many of my friends and family to him because I don't do friends and family taxes. I try to keep that boundary. But he takes care of them, and having a trusted advisor is so key. So I'm grateful. My name is Cheryl. I go by the Little CPA on Instagram. The goal of the Little CPA is to provide information to help thriving professionals make wise decisions. So what it is, it's a financial literacy platform. It's catered to people who are making money, employed, self-employed, have investments already, and the goal is to provide them with information so they can take their income, their wealth a step further. So if you're looking for somebody to help you with basic budgeting, if you're living paycheck to paycheck, my content is not really for that. But if you're aspiring to get past that paycheck to paycheck and become financially stable, then the content can be something you aspire to. But if you are somebody who's, you got a career, you got money, you got a 401k, all that kinds of stuff. I try to provide information so that you know what to do with that money, because you're now on the wealth building process. And a lot of times that information, it's either so much information that you don't know what's correct and what's not, or you don't have the information at all. You've met a level, you've met the goal, you have an income, you have stability, but really there's so much more to wealth. And my goal is to provide qualified information to help you make wise decisions with what you have. So that's that. I'm a CPA, been in this thing for 10 years. Wow. I am not self-employed. I do. Not yet. We getting there. My employer, I'm never. I'm not self-employed. I work at an accounting firm as a senior tax manager, and I manage and review tax returns for public charities, from museums to social justice organizations, private foundations, charitable trusts, even some single-member LLCs, and other general tax work. So that's pretty much the breadth of my work. I really enjoy what I do. And I am also a mom. I enjoy that more on most days. 2 little kids, and I love them very much, and happily married as well. So, absolutely. Man, well, again, I'm so honored, so grateful, that God has made this to happen, right? And we know that nothing is by chance. Absolutely. All of this is absolutely by design. So thank God for you being here. And as you heard her say, she deals with nonprofits, has been in this for over 10 years, which is why I'm happy to have her on the show, because a lot of the family members have asked, about nonprofits, but that is not my particular strong suit. Like, I know a little bit about nonprofit. I know the tax form, the 990s, right? Mm-hmm. That's about it. So I have the expert here
And we're going to kind of talk about nonprofits. I have a few questions. You can see them here on the screen here. So let's kind of get right into it. So off the top, their nonprofits have always been this unicorn type of entity, right? Mm-hmm. People want to form nonprofits because they don't pay taxes. So I think there's a misconception that, if you form a nonprofit, then somehow, some way, you as the individual owner are tax-free.
Right.
Right. And I know a lot of people try to form nonprofits to avoid taxation, to get around something like that. So let's start with the basics. Why form a nonprofit in the first place? Like, why a nonprofit versus a regular C corporation or a regular business, from your experience?
Right. So one thing to get straight is nonprofits are exempt from income tax only. Okay, so there's so many taxes. There's payroll tax, there's excise tax, there's unrelated business income tax. Nonprofits are only exempt from income tax. So if you get paid as a nonprofit executive director, nonprofit founder, that income is still subject to payroll tax. So just to make that clear. And the word nonprofit is really either a state designated term or it's an industry term within the nonprofit industry. From the IRS perspective, they are tax exempt organizations, and tax exempt meaning income tax exempt. The reason they're income tax exempt is because they serve a not-for-profit purpose. So a lot of times you think charity, right? You think like Boys and Girls Club, youth programs, you think of homelessness and all that. But there's also other types of not-for-profit organizations that you might not think of. Cemeteries, not-for-profit organizations, right?
Really?
Yeah. Certain cemeteries. A cemetery can be a for-profit organization, but it can also be set up as a not-for-profit. If you're not in the business of trying to make millions off of death, and you just want to have a land dedicated to, burial and all that, it can be not-for-profit. Chamber of Commerce can be not-for-profit. Fraternities, sororities, not-for-profits. So there's all these different types of not-for-profits. So if you want to do something more to contribute to society rather than put money in your pockets, nothing wrong with putting money in your pockets, but some people have that greater impact they want to create, then you can consider forming a nonprofit. Having said that, know that the nonprofit industry is one of the most highly regulated industries. Why? Because of so many bad actors. So, we recently heard about the college foundation scandal, right?
Yeah.
People, use nonprofits sometimes as funnels for illegal activity. And that's happened over the years. And so something happens, a new law comes out, and now nonprofits have another compliance item to take care of. So just know that when you form a nonprofit, it's not about, I formed this organization and now I get to hand out money and that's it. No, you have a lot of compliance factors, potential to be audited, all those kinds of things. You still have your payroll taxes. There's a lot going on with a nonprofit.
Man, you said a lot just in that first.
Yeah.
So let me make sure I understood, to clarify, right? So the not-for-profit, the only exemption is the income tax. And that's only on the company itself. As a director, you still have to take a reasonable wage.
Right.
And because that reasonable wage is going on your personal taxes,
right,
you still have to be responsible for all the taxes that goes along with that.
Exactly.
So you, as the director, still have to pay the federal tax, Social Security, Medicare, state, and all that. Wow. Okay. Yeah, so take note.
Yeah.
Forming nonprofit does not mean you are tax exempt, but the entity itself is, and that's only from income tax.
Only from income tax.
Okay.
And while you say that, I want to bring up that when you form a nonprofit, the IRS, the state, they see it kind of like a charitable trust. So no one can own a nonprofit. Okay, you hear a lot of people say things like, I have a nonprofit. No, you don't. As soon as you form that thing, it's automatically its own entity, a charitable trust. So if you pay yourself from the nonprofit, like you said, it has to be a reasonable wage. If, say, your nonprofit brings in 5 times the amount of grants in 1 year. You can't say, as you would in a business, oh, I brought in 5 times the revenue, so I'm going to increase my pay. You can increase your pay for inflation and, normal raises and things like that, but you can't increase it 5 times, right? Because you got a grant, unless your job duty significantly changed. If you have good facts and circumstances, you can pay yourself more. But all that to say is it's not yours. So you have to handle the money as a fiduciary of charitable assets.
Wow. Yeah. Wow. So that's something y'all need to look into. What is a fiduciary? What is a fiduciary responsibilities,
right.
Their legal obligations? Because if you're forming a nonprofit, that is what you are taking on.
Exactly.
Oh, wow. So knowing that like, again, what you said, nonprofits being highly regulated, a lot more compliance, I'm assuming, because I feel like you said this already, but I just want to qualify. Like, so is there a specific benefit to a nonprofit versus a regular corporation? I know you said, like, if somebody just feels like they want to be that giving person,
right.
But outside of that, is there anything?
Yes.
Yeah.
Yeah. So I work with nonprofits, but I absolutely love the sector. Okay. I went to grad school. I got my master's in public administration, which is like the MBA for people that want to work in government or nonprofits. But my focus was nonprofit.
Didn't know that.
Yeah, my focus was nonprofit management. And I just totally believe that the world needs nonprofits. The nonprofit sector does what the government can't do and what businesses won't do. All right, so you think from everything from church to who's going to take care of your kids after school to relief efforts, whether or not you think there's some controversy with American Red Cross, whatever. Some of these organizations are really taking care of people after these earthquakes, things like that, to getting the COVID knowledge out there. It's just the nonprofit does so much good. Hospitals, clinics for those that can afford hospital bills. There's so much good that a nonprofit can do externally. Internally, there's also so much good that a nonprofit can do. When you set up a nonprofit, it kind of like a corporation, you have to have a board of directors, and then you need to have management to manage everything. And within that, there's so much impact that can be made. A lot of professionals will serve on the board of a nonprofit, and that's really what governs a nonprofit, the board of directors. They most of the time serve as volunteers to direct the nonprofit and programs, things like that. But the board of directors is actually a great networking space. So a lot of times you'll see these bigger nonprofits like the library foundations and all that. You'll have the mayor and, the CEO of what's a Fortune 500, some Fortune 500 company on there and all that, because being on that board provides them a space to meet other high-level professionals and for a common good. Right, the nonprofit governing it. So within that internal space as well, there's so much impact that can happen. Not only that, nonprofits provide jobs. I forget the number, but there's a significant amount of GDP that's related to nonprofits. They really contribute to the economy, and not only do they provide jobs, they give people jobs that mean more than just the paycheck. Right, you are a program service officer of an organization that provides STEM services to Black youth. Wow. Say that's something you've always wanted to do, help Black boys get into the engineering and sciences, and now there's a job out there through a nonprofit that lets you do that. So there's the impact there as well. And then if you work for a nonprofit for 10 years and you have student loans, it can get forgiven. But make sure it's an eligible nonprofit. So there's so many benefits to nonprofits.
That sounds like a lot of perks.
Yeah, I think that it's a much needed sector. It needs to be more recognized, needs to get more acclaim. I think the name needs to change. I think when people hear nonprofit, they think no money, it's, charity and all that. No, UCLA is a nonprofit. Well, it's a government entity. That's a bad example. USC is a nonprofit. It's a private university. Okay, so that's a nonprofit. Cedars-Sinai is a nonprofit, I think. Certain big hospitals are a nonprofit. So the nonprofit sector is vast, it's powerful, and it can do a lot of good. Yeah.
Wow.
That's a mouthful. But
wow.
clearly,
I mean, but that's good. That's good information. Thank you. I feel like my little bit has grown to maybe a little bit more now because I had no idea of all of this information when it comes to nonprofits, man. Thank you so much for that. So I guess my next question is like, what are some of the pitfalls? And here I really want to address the individuals like we talked earlier who think they're going to get into a nonprofit and try to do some tax avoidance or tax evasion and things like that, right? Like, you know, it's not for that. And even to address those individuals who have the heart for it, right? Like, I really want to get in this. I really want to do this charitable work. I really want to be for my community.
Right.
What are they getting themselves into?
Right. Compliance. So, you know, if you have a business and you have no activity, you don't have to, if you have an LLC, we'll say LLC, right? Single member LLC, you have no activity, you just file it with your personal tax return, 0, good to go.
Right.
A nonprofit, the first year you start your nonprofit, okay, even if you made negative $0, okay, you got to file a Form 990N. You got to file, in California, you have to file a state form 1990N, not 199N. Not only that, you have to file 2 forms with the Attorney General. So there's 4 forms in California that you have to file as soon as you start a nonprofit, even if you haven't received exemption yet. There's a box on the form that says exemption pending. So they're like, even if you haven't filed your tax exempt notice or even received approval yet, you check that box and you have to file something because they want your charity, your nonprofit, on their radar right away so that they can monitor you. So pitfalls is people don't know that. People say,
absolutely.
People have come to our firm a lot of times. You know, I just applied for tax exempt status. I've been operating this nonprofit for 3 years. We say, have you ever filed a tax return? Because I'll get back to that. Have you ever filed a tax return? No, I didn't have no activity. But did you file a tax return? No. Well, it's required. So sometimes, people will set up their nonprofit as a LLC or something like that, and we'll get to that. I feel like I mixed that up. Some people will start their nonprofit more like a business. So maybe a sole proprietorship or something like that, and then decide that they want to have a nonprofit. And so they'll handle the business side of it, you know, pay their income tax on the earnings, and that's fine. And then you decide that you want to become a nonprofit and you use that EIN to do the nonprofit work. That's fine. But some people just haven't filed anything at all. And that's when we're like, okay, we need to get on top of it, because if you don't file a tax return, I should say an information return because it's tax exempt. If you don't file that for 3 years, you lose your tax exemption, and then you have to be a business, a for-profit organization. So that's the biggest pitfall. People don't know that they have to file their returns. They don't realize that they have to file not only with the IRS, but also with the state, the Franchise Tax Board. And in California, you have to also file forms with the Attorney General. A lot of states, every state is different, just like with business returns, right? In business, it's called nexus when you do business in another state and have tax requirements. On the nonprofit side, it's called charitable solicitation. So if you, charitable solicitation. But what that means, so if you're in California, you go to Tennessee, do a fundraiser, you've solicited charitable funds in Tennessee. So you might have to now file a form with the Tennessee Attorney General equivalent and register with them to be compliant. And so people don't realize that as well. The federal and state requirements are the biggest pitfalls at the small nonprofit level. At the big nonprofit level, that's a whole nother podcast. There's a whole coming. That's what I do. It's a whole career for that, dealing with the pitfalls of larger nonprofit organizations. So it's a lot. Yeah.
Wow. So let me kind of back what you said. So some people Well, is it possible? Let me start. Is it possible to just wake up one day and say, I want to be a nonprofit, and then act as such? Not necessarily file any form of paperwork, but say, you know what? I want to be charitable in my business dealings.
Right.
I'm going to act as if I am charitable in my business dealing. Does that automatically give me permission to do so, or do I still need to file formal paperwork so that it'd be recognized, I guess?
That's a good question. You have to file the paperwork to be recognized as tax exempt. So
Okay.
if you say, hey, everybody, justice for my friend who was put in jail wrongfully, I'm going to start a nonprofit to advocate for this. Donate to me.
Right,
If you say that, first of all, their contributions are not tax deductible because you don't have tax exemption as a 501c3 yet.
Okay.
So you can't just wake up and say, give me tax deductible donations. You can't do that. Second, that income comes, since you haven't filed for tax exemption, that income is technically taxable because you're getting
Economic
it depends.
gain at
Yeah,
that
it
point.
depends on how it's coming to you, right? If it's a gift, there's certain rules around income as gifts. If they're, donating stock, it depends. So I'm going to leave it at that. I don't want to get in trouble, but just it's not tax exempt income. That's what I'm trying to get at.
Right.
You can't just wake up and decide to be I want to say you can't wake up and decide to be a tax exempt entity. You can be a nonprofit. Man, some of these businesses are nonprofit, right? They ain't making no money. So, you could be a nonprofit all day, but to be a legally IRS tax exempt entity and get the benefits that come with that, you have to file the paperwork at the federal and state level. Yeah.
Man, so if your business not making money, you a nonprofit.
Exactly. That's where is the lie? Right?
Oh man, that is true. I never thought about that. I'll put that on the
Yeah.
shirt somewhere. That's gonna be we're gonna make that into some merch. Man,
Yeah.
that's good. One of the pitfalls. Now, again, you've introduced a lot of terms to me that I've never heard, I'm familiar with, so I appreciate that, Jim. But one of the pitfalls that I really want to talk about is the unrelated business income. I know that happens a lot when people get into nonprofits and they don't understand the structure, right? Because here's where my little bit of knowledge comes in, knowing that if you form a nonprofit, somewhere in the paperwork you have to state the purpose, right? And that's what governs it, is based on that purpose. And if you go outside of that purpose to generate income, you've now created UBI, unrelated business income, and that portion isn't exempt, right? You actually have to pay tax on that. Am I close?
Yeah, look at you. Look, I'm about to give you some 990s now. No, you hit it right on the nail on the head. And if you want to start a nonprofit, I recommend you go to Google, look up IRS Form 1023. That's the tax exempt application form. Look through that, and you're going to understand what's required from you as a nonprofit.
Okay.
You're going to see where you have to put in your mission and your program service activities to prove that you're doing charitable work. When you form your nonprofit, you need to stick to that, okay? Here's the pitfall. People start a nonprofit, and it's hard to get grants out there. It can get competitive, especially if you're in a competitive area like what's a competitive area? Social justice is pretty competitive right now. Everybody's getting on that. Health, science. If you're, grants can be hard. But the grant people out there will tell you, government's giving out money, stuff like that.
Absolutely.
I mean, they were during COVID, but it's a process to apply for grants. There's people that do that for a profession, So people realize how difficult it is to get funds that way, and they say, oh, well, let me start investing in this this hedge fund, and then I'll use that money to fund my nonprofit. Or let me buy this rental property, get a mortgage on it, use that rental income to fund my charitable endeavor. And you're thinking like a business person and not like the IRS, okay? And I usually don't fault people for thinking like a business person, as you should if you're in business. But if you have a nonprofit, you got to stick to the tax exempt rules. And so that's where unrelated business income comes from. When people's unrelated business income has to meet these 3 qualifications. The activity that causes unrelated business income has to be a trade or business. It has to be regularly carried on, okay? And it has to not relate to the organization's mission. So if all 3 apply, you have unrelated business income.
Wow.
There are certain exceptions. So let's say that you invest in a partnership as a nonprofit, and that partnership gets interest and dividends, capital gains. Those are normally exempt from unrelated business income. And I say normally because I always, there's always this, and that, case by case. Don't take this and be like, well, let me invest in X, Y, and Z. No. Talk to your tax person first. See if you can do that. They'll look at the rules. So all that to say is unrelated business income is a big thing. If you incur unrelated business income, it's not a bad thing, okay? You can do it. Now, if you get out of hand where, like, all of your income's coming from your rental property for your nonprofit, then there's another issue there with public support, which we could talk about. But you can have unrelated business income. In fact, if you look at most of these big grant makers, like the Gates Foundation and things like that, they have unrelated business income. They're investing in different entities and all of that. Not a bad thing. Just know that if you get the income, it's subject to tax. And I'll say right now, because the law could change tomorrow, because they keep changing these laws.
They do.
Please stop. Then it's subject to a corporate tax rate, which right now is 21%.
21%, yeah.
Yeah, okay, yeah. 21%. So if you bring in a lot of money, that could be a lot of it going to tax. It's subject to the tax. And if you're set up as a trust, it's different. Because trust can be nonprofits, but that's different.
Yeah, charitable trust. We're gonna that's gonna be part 3 then. Yeah, we can talk part 3, talk about some charitable trust. So you mentioned some, which you kind of segue into my next point. What is required to maintain the status of a nonprofit? Because my understanding, even still, if you continue to do things that's not according to the mission and not according to the purpose, eventually. Or is it even possible that eventually the IRS can revoke your nonprofit status? Is that possible? Yeah.
So if you do something outside of the mission and it meets that unrelated business income test, and then that income is not public support. Okay. Let me talk about public support.
Because you mentioned that before. So what is public support?
Yeah, and then I'll get back to how you can lose your tax exempt status or your public charity status also. So when you form a 501c3 nonprofit, those are organizations that normally are literary, have some scientific purpose, or are charitable. That's my definition, okay? It's a big definition under IRS code 501c3. Go look it up. But that's pretty much what it is. Then you're what's considered a public charity. Why are you called a public charity? Because you're expected to get most of your funding from the public. The public meaning government grants, private grants, individual donors, things like that. To remain a public charity, you have to get so under code 501c3, you can further be classified under this code section called 170, blah, blah, blah. It's like 4BA, something like that. So you can go in that route, or you can go be a public charity 501c3 with a further classification under IRS code section 509A2. The general rule for both of those, I'm not going to get into the technical stuff here, but the general rule for both of those is you have to get approximately 33.33% of your income from the public. Okay, so you can have interest income, investment income, random other income that's not UBI, but at least 33.33% of that has to be from the public donating. Okay, if you're under the code section 509A2, you're allowed to also get program service revenue. So you'll see like a dance nonprofit, right? People pay for dance classes. That's program service revenue. That can count towards their public support. and help them out. But if you're not classified under that 509A2 and you're under that 170 blah blah blah, then 33 1/3% of your income has to be from the public. There's other types of income that do count towards public support as well. I'm not going to get into that, but I just focused on the main types. So if you don't, then you can risk losing your public charity status. Before I get into that, I want to say that that public support requirement is over a 5-year period. So the public support test, looks at your income over a 5-year span. And if within that 5 years, the calculation does not come out to 33 1/3 or higher, then you start to become at risk of losing your 501c3 status. So in your first 5 years of operations, you actually get a grace, which is good, right? Because when you start a nonprofit, you're not about to be getting money from X, Y, and Z. It's just you probably donating.
Right.
So you have time to get that public support test up, but you need to watch that clock because that 5 years comes up quick. So that's all I'll say about the public support test, because now I want to talk about if you fail that test, sometimes you can have your tax person do a facts and circumstances response to the IRS saying that, well, the test was greater than 10%. This is why. And, if you have the right CPA, they can get you out of that. But sometimes you can't. And when you can't, that means you have to become classified as a private foundation. All right. And so private foundation is not a public charity. Well, it's a 501c3 organization, but it's not a public charity. And when you're not a public charity, guess what? You don't have to get all your money from the public. So you think of like Elon Musk and Bill Gates, they're private foundations. They are the prime funders, or Tesla is the prime funder. And that's okay because they don't have to meet the public support test. But private foundations, they have to give out a certain percent of their assets every year. So now you have to worry about, am I distributing enough income to charity every year? Not only that, if you get investment income, it's now subject to an excise tax. And there's all these rules that around like self-dealing. You can't pay government. You can't pay for any type of advocacy work related to politics. There's all these different rules around private foundations. So it's a whole different field. They'll charge you more to do your tax return for a private foundation. So you really want to stay public charity. So that's losing your 501c3 status, not necessarily tax exempt, because private foundations are exempt from income tax, not excise tax. Right now, the excise tax is 1.39%, which is the lowest tax rate out there.
True.
How do you lose your tax exempt status? There's a lot of ways you can lose it. One is you can not file your tax return for 3 years. That's the easiest way. There's also if you pay too much in lobbying and political activity, then you can lose your tax exempt status. Now, most people think, nonprofits can't do any political activity at all, right? That's why churches they're not supposed to tell you who to vote for and stuff like that. But the reality is there's an educational aspect to politics. There is advocacy. So, a nonprofit can. Now, you guys just know I'm giving very general information. I say this.
This is a lot of good, very general information.
The Little CPA, not your Little CPA. Do not take this as financial advice. Okay, it's informational only. Mm-hmm. So don't say, the Little CPA, you can actually do certain type of politics. No. Go do your research. So they are allowed to do certain types of lobbying, contribute to ballot measures, things like that. But if you contribute too much, you can put yourself at risk of an excise tax. And then if you start telling people who to vote for and things like that, you can lose your tax exemption. If you engage in insider transactions, where you own, I won't use an example for a client. I'm going to try to dress this up. If you have a vacation home and you say, you're the executive director of a nonprofit, you have a vacation home, and then you use that vacation home for the rental income, what am I trying to say? Say you benefit this vacation home, you try to say it has a nonprofit purpose, but really people are coming to stay there, giving you rental income, but maybe they're staying there because they're traveling missionaries or something like that. And you try to say, oh, it's a nonprofit purpose, but you're really pocketing the money. That's an insider transaction. If you have too much of that going on, you could lose your tax exempt status. There's lots of ways. Those are just a few. So that probably is a lot. I'll stop there.
No, I mean, that probably blew a few people's mind. Yeah. I know when we talk about insider transactions, right? So, because just talk about some things that I've heard, and I'm like, you know what? I don't know. So say, for example, you form a legitimate nonprofit, you get tax exempt status from the IRS, and you say a 33 1/3 of the funding into that has to come from the public, right? But what if, and again, this is just trying to clarify, you are the individual alone that's providing that 33 1/3. Is that possible, or is that insider dealing?
That's not insider dealing, but I'm glad you brought that up because there's another aspect to the public support test. So you have to get 33 1/3% of your contributions from the public, but if anybody gives too much, they are excluded from the 33 1/3%. So let's say that every year I have a nonprofit. Every year Tyrone gives me $10 million, okay? And every year I only bring in $15 million, okay?
Okay.
So it looks like I'm generating income from the public because Tyrone is an individual donor. But really my nonprofit is really relying on Tyrone, right? Because without him, I still have $5 million, but let's say that's not enough, okay?
Right.
So Tyrone becomes an excess contributor, and a percentage of his contributions do not count towards the public support test. So the IRS does this because like I said in the beginning, as a nonprofit, you're considered to be a charitable, kind of like a charitable trust. So just like when you have investments, you have to diversify. They want to see that you have a diverse stream of contributions coming in. So if only one donor is contributing to you over time, then if something happens to them, then what happens to your nonprofit? What happens to the charitable mission? What happens to all of that? So
that makes sense.
Of course, there's different scenarios depending on the IRS code section, how your nonprofit's classified, but you want to make sure you're getting funds from diverse sources. Having said that, if a 501c3 nonprofit contributes to your nonprofit, now there are nonprofits out there, public charities that just grant money out. Or if a government entity contributes to your nonprofit, they are never excluded from the public support test. So you can have the U.S. Department of Agriculture contribute $10 million to you every year, and it's not going to be excluded from the public support test. Okay. But if Tyrone contributes every year, it will be excluded. So yeah, that's the nuances of that test. It's not insider. That's not an insider transaction. That would be excess contributor activity.
Excess contributor. Yeah. But it's still allowed, though. So somebody can form a nonprofit and contribute to that nonprofit and deduct it on their taxes because technically it is separate.
Yep.
Wow.
You absolutely can do that.
Wow.
Absolutely. And
I don't know who would want to,
No. I didn't mean it. I
get that, but I'm like, okay.
Yeah, that's why these rich people form their private foundations.
Really?
Yeah, that's why they form them because, well, I'm sorry, Bill Gates and all you. I'm sure you'd sign
Wealth
that.
Strategies alert.
Yeah, Wealth Strategies alert.
Yeah, there we go. Wealth Strategies alert.
But that's why, because that's part of the reason why we have clients. This is what they do. They form their nonprofit. Sometimes they form a few. And when it's December 20th and their tax person says, okay, you will potentially owe this much in tax. How about you donate to your private foundation or donate this stock and your tax liability will reduce. So it's a huge wealth strategy. And I won't get into this, but now the more popular strategy is to give to donor-advised funds, not a private foundation, not a public charity, but the donor-advised fund.
Is that going to be part 4?
That's part 4. Look up donor advised fund.
Look up donor advised fund. We're going to look that up.
Yeah.
Man, wow.
Yeah.
Wow. So, wow, really? Like, that's what, because I've heard, right? Almost all the wealthy individuals, we look at Elon Musk, Bill Gates, Jeff Bezos, they all have.
The Obamas.
Private foundations that they've established. And of course, to the public eye, they're doing charitable work.
Right.
But on the back end, it's a wealth strategy.
Yes.
All right.
Look up almost the only exceptions. There's a few exceptions are the Zuckerbergs. They formed charitable LLCs instead of private foundations. Yes. Okay. So some people go that route. The reason they do that, let me just talk about that and the donor advised fund really quick. The reason they do that is, in case you don't know, nonprofit tax returns, so public charities, private foundations, however you're classified, they're public information. So if you want to look up, keep talking about Elon Musk, if you want to look up his 990, which is the nonprofit return, you can look up his 990 PF and see who he gave to, who the directors are, how much money they made, all of that.
All that information is just there?
Yeah, it's on the IRS website. So the reason the Zuckerbergs did not do that, you guys have seen Zuckerberg in the news. He'd be doing some stealthy stuff.
Yes.
And, so the charitable LLC, you can't look up LLC returns. So the charitable LLC is dedicated to doing charitable work. The LLC gets a tax deduction for anything it contributes to that's a qualified charity, but we won't know about it.
Wow.
Yeah, and the same thing with donor advised funds. The donor advised fund is this fund usually held by an advisor, so like Fidelity and Schwab, they all have these donor advised funds where donors can come set up a fund, and they put that money in that fund, and it immediately is tax deductible. All right, just being in that fund because of how the donor advised fund is classified under the IRS code. You put the money in that fund, and then maybe you could at that time say, okay, now after that's in that fund, you can give it to XYZ charity in 3 months, or you can wait 10 years and then give it to a charity. So it's this funnel where you can put your money in for a charitable purpose, but really not designate the funds until you desire. Lots of people are mad about this, especially in the nonprofit industry, and there are proposed regulations coming out to monitor those funds, but it's another way to put your money in an area, and then once it's in the fund, nobody has to know where it went after that.
Wow.
Even Elon Musk, I looked up his private foundation. He had to distribute like 13 million of his assets last year, or in 2018, he had to distribute about 13 million of his assets. Yeah, from his private foundation.
Okay, that's mandatory.
Yeah.
Got you. Okay.
Yeah, and he gave $6 million to a donor advised fund. So from his private foundation, he put $6 million into a donor advised fund because it's a charitable entity. Who knows where that $6 million went? He could have, he could be funding, the most off the wall. He could be funding, Trump. So I don't know, something.
Whatever, but it's private. Wow.
Yeah. So the funds from the donor advised fund do have to go to charity. So he can't fund Trump, but say there's a Trump related nonprofit.
He could be Trump,
and it could all be funneled in there. So that's another wealth strategy that people are using, and very, very common. Fidelity donor advised funds is actually the largest nonprofit now in the U.S. because so many people are putting their money into donor advised funds.
So donor, right? Me donating, I'm the donor. Mm-hmm. So then I, at my discretion, tell them what charity to put the money to?
Yes.
Wow.
Yeah, and it's called donor advised because once you put the money in the fund, it's technically no longer yours. It's irrevocable, right? So it's called donor advised because the advisor, Fidelity, Schwab, or whoever it is, they can say, no, we're not going to give to that. I've never seen that happen, but I imagine maybe, say you become incapacitated and you're like, hey, give the money to, this terrorist. I don't know.
Right.
Then they could say no. So that's why it's called donor advised, because you can advise as the donor, but you don't have the final say so.
Makes sense. Yeah. It makes sense. Man, your wealth strategies. Mm-hmm. Wow.
Yep.
Wow. Yeah. My mind is absolutely blown at this present moment. Well, man, hold on. I gotta collect myself from now. When you said that, and my mind immediately started turning like, whoa. Okay. So next question, because you did mention, right, how the Zuckerbergs and the LLCs and things like that. So again, to my knowledge, being what it is, that in order to form a nonprofit, that option was only available to C corporations, right? Like you had to first form a C corporation, then fill out the application to have it be recognized by the IRS as a 501c3, meaning that sole proprietors cannot be nonprofits, and LLCs cannot be nonprofits. So is that still true? Like I read something somewhere that now was maybe possible that LLCs can be nonprofit, but what about partnerships or obviously trusts, right? There's charitable trusts.
Yeah, certain types of trusts.
Certain types of trusts, but mainly for LLCs, right? Because LLC seems to be popular nowadays.
Right.
So.
Yeah. So the IRS did release a notice in October, I think. What is it, November? Yeah, last month. That says that LLCs can now become tax-exempt organizations. And it's really new, so I'm going to just touch the surface level of it. What it pretty much says is there's 4 stipulations that an LLC has to follow in order to become a tax-exempt entity. And look up IRS notice LLC tax exempt. Look up those, and then you'll see those 4 requirements. But one of them is your members of the LLC also have to be tax exempt organizations. So if self-employed tax guy was an LLC, you're the member. Self-employed tax guy can't be a tax exempt organization because the money is being funneled to you.
Right, because I'm not a charitable entity.
You're not a nonprofit?
I'm not a
You're
nonprofit. I'm trying not to be a nonprofit. I want to be a profit.
Yeah. But if self-employed tax guy it changed its member to, 100 Black Men Los Angeles, which is a nonprofit, then self-employed tax guy, to my understanding, again, it's new. Okay, the legislation is new. They're accepting comments. We got to learn more to really
changes to come.
Yeah, we have to learn more. But from my understanding, from what I read, is self-employed tax guy could request tax exemption because its member is a nonprofit, being 100 Black Men of Los Angeles. So more to come. Don't bombard your tax person right now because they'll say, I don't know. Okay, I don't know. But it's happening, and it's gonna happen.
Oh man. Okay. Well, that's so. We heard now, as of this recording of this video, that's something brand new, a month in. If we know anything brand new introduced by legislation of our government, is going to go through some changes.
Exactly.
Before it reaches its final form.
Right. Exactly. Yeah.
Man, that is, but that's good though. That's good though.
It is. I think there are a lot of people out there who do charitable work with their LLCs, and they're just not educated on nonprofits.
Right.
And so it'll be a good option. I think it'll hit home the most is in affordable housing. So a lot of people in affordable housing will create an LLC because of affordable housing tax credits. Okay, so you form an LLC, you provide affordable housing, and then you qualify for these credits on your business return. And then a lot of times the beneficiaries of these LLCs are nonprofits, other types of organizations that work around affordable housing. So now that LLC can be a nonprofit, why worry about tax credits if you don't even have to pay tax as tax exempt? One reason they might not want to is because sometimes these affordable housing LLCs, while some members are nonprofits, there are some members that are businesses, so they do benefit from the LLC. So it'll be case by case, but I can see how that would really benefit that industry.
Oh, wow.
Yeah.
Man, nice. Man, bomb, Jules. Oh, my goodness. You sure you don't want to be self-employed? Because there's a lot of people with a lot of questions on this one. You dropping so many jewels.
Yeah. That's 10 years of just doing this stuff. So,
man.
But I love it. It's my
I can
heart.
tell. I can
Yes,
tell. I can
my
tell that
heart.
it's your passion. I can tell that you
Yeah.
really love what you do because, again, even with me just being in taxes about the same, about 10 years plus, I've had nonprofit conversations, talking to people about nonprofits, setting them up and the process, but so many terms that were just in this little time that you've been here, terms I've never heard in my 10 years of being in the industry, right? So we can definitely tell that this is something you have a heart for because you went beyond the call of duty to understand nonprofits. And man, good job for your employer. They're blessed to have you. They better be paying you $1 million a year, right? Because almost. I can tell you bring them that much value. So my last question would, I guess, because now you made me think of something else. But before I get to my last question, let me ask this: we was talking about the types. So we know C corps, LLCs, trusts, B corporations.
Oh, okay. Yeah.
Have you heard of those?
Yes.
I heard that term. It slid by me.
Yeah.
It went into my ear, and I was like, "What?" I know that's C corps, S corp. Now we got B corps. But when I looked into it, it's not a nonprofit per se. But it's what is it?
It's not a nonprofit. You go to the IRS and tell them you have a B corp. They'll say, "Okay, where's your tax? Where's your tax money?" B corps are great. Okay, it's a certification. It's not a tax status.
Oh.
Okay, so B corps are great. Just like you become a woman certified business or a minority,
like a WBE or DBE or something like that.
Yeah.
Okay.
So or you can be a B corp, and what it just means is you're determined to do good. There's certain qualifications you have to meet to be a B corp, right? You sometimes they call it a triple bottom line. So you have to you want to make a profit, something else, and then give to a good purpose.
Okay.
Clearly, it's not my area, B corps, but I am I'm familiar enough with them to know that they are not nonprofits, and there are benefits. So you can apply for grants as a B corp. That there's certain grant makers that will give to you because you're determined to do charitable work as a business, just like any other certification. So if you want to go the B corp route, great. Just know you're not tax exempt.
Good. All right. So we clarify, because the thing that I've learned in this industry, the terms matter. So the B corporation is a certification, not a classification.
That's good.
Yeah. Okay.
That's a good way to say it.
We
Boom.
understand that.
Bars.
Exactly. Bars. Yeah, because terminology gets twisted. And so, lastly, at least for me, requirements, federal versus state, because there's always the separation of the two, right? And I realize this because I recently tried to help somebody, which I said, man, this conversation is so on time. I had somebody who came in, and it was funny. They brought me the letter. They got a letter from the state of California demanding the franchise tax fee, and they thought that they were a nonprofit. And I'm like, so I'm reading the letter, and I'm like, no, it doesn't seem that way. And they say, well, we have a nonprofit in Washington.
Oh.
And I'm like, okay, well, that's maybe recognized on the federal level from the state of Washington, but what you registered here in California, they registered it just as a regular not-for-profit corporation, which is something completely different than tax exempt.
Yeah.
So it still was a corporation in the eyes of California, and they wanted that corporate tax return.
Right, okay.
Right, so I was like, okay, so there is a very distinctive difference between federal requirements and state requirements. So in your experience, in your 10 years, how do we balance those two, or is there even a balance? What do we do to bring them together?
States are horrible. It's just like business though, right? Everybody hates Ohio and everybody hates certain states, but they hate the tax compliance,
laws. Yeah.
The tax laws in Ohio. Okay,
we love Ohio.
Okay.
It's y'all laws.
I can't even say Dave Chappelle. We good, okay. So, anyways, So in California, I'm going to speak on California because that's where we are here. Okay,
right.
Every state's different. In California, to receive tax exemption, the first thing you have to do is file articles of incorporation with the state, the Secretary of State, okay? So in order to become a nonprofit at the federal level at all, you first have to start with the state, California. So you send your articles of incorporation in. Just side note, those articles of incorporation do have to have certain language in order to qualify for tax exemption. So make sure, we normally recommend you work with attorneys to get those prepared. I know some people like to do that stuff themselves, but we're getting into legal stuff, so I'm always going to recommend an attorney.
Absolutely.
So you send that to the Secretary of State. They file it and say, we got it. They send it back to you. And then you fill out the IRS exemption form. And then at the same time, you can fill out the state, in California, it's Franchise Tax Board. You fill out that exemption form as well. Okay, and so that means that you've requested exemption from the IRS, and now you've also requested exemption from California. It's not an automatic thing. If just because you're exempt with the IRS does not mean you're exempt with the state, and vice versa. So a lot of people don't realize that. They think that just because, I think in the business world, when you file for making an S Corp election or something like that, it's really only a federal thing. So, the state compliance requirements are real. Washington doesn't have an income tax, so I can see how that kind of got missed. You don't have to file a state form in Washington, so you got to just be careful of that. All states matter. Yeah.
Well, that's good. I'm glad you mentioned that, because that's something to note, right? Like, a lot of people try to go form these entities in different states because they have favorable tax laws, not necessarily understanding that, okay, where are you sitting at? Where is your butt seated at? That's the state that matters, right? Because like even here in California, a lot of people, I'm going to go form a Wyoming corporation or a Delaware LLC. And I'm like, but California laws state that if more than 25% of the profit is from California, you have to register it here in California. Right. So now you dual state. I made that mistake. That's how I learned my lesson. And I'm trying to, teach everybody else don't do it like that. But I know a lot of people that do that. So it applies to the same for tax exempt entities. Like it starts at the state. So therefore you should start it in the state where you're at. There's no strategy for forming it somewhere else and you'll get it better, I don't know, tax exempt, right? Nothing of that.
Yeah. And we see that on the nonprofit side too. People, whoever tells them, oh, make sure you register your nonprofit in Delaware instead of California because of the tax benefit. There's what? You still have a filing requirement in Delaware as a nonprofit also. It's a little bit easier, I'll say, but it's still something you got to do every year. So don't listen to that. Exactly what Tyrone said. If you're in California, if you're in New York, file in those states and just deal with the compliance requirements. It'll make your life easier.
Right.
Yeah.
All right. Yeah. Man. Well, I think that's, I don't know. I can't even talk. I'm good. I feel like my cup is overflowing. That was so much.
That was a lot.
So much.
It was a lot. It's fun.
And it was a lot, and then we still got like 3 more parts because you said it's like part 1, 2, 3.
I know. 4. Yeah, we could get into some stuff. Donor advised funds, large organization pitfalls, and all that stuff.
Wow.
It gets real interesting. Yeah.
Well, that's good though. But so there you have it. We can conclude. I'm good. I'm filled. I do believe we have enough to set people on a real solid foundation. You really gave them some amazing knowledge to go forth and say, yo, if you are considering a nonprofit, here's some stuff you really need to consider, right? All we talked about, why form it, the benefits, the pitfalls, the compliance, which I think to me is the absolute biggest thing, right? Because if you fail compliant, even on the regular business side, if you fail to be compliant, you can lose that business, right? And then also the whole benefit. So you can't wake up and just say be a nonprofit and be like, give me money, because the whole purpose of the nonprofit, I can say the whole purpose, but when people donate, it's a tax benefit to them, right? And if
it's a 501c3 public charity or a private foundation.
Okay.
I want to just clarify that because not all nonprofits can receive tax deductible donations.
That's what?
Yeah.
Really?
Yeah. We talked about it earlier, but like I said, like Chamber of Commerce, they're under. So IRS. Most nonprofits are classified under IRS Code Section 501.
Okay.
Okay. So you have 501c3. You guys all see those in the commercials and stuff. But there's 501c1s, 501c2s, 501c. It's all the way I think up to, I can't remember. It's more than 25.
Really?
So you want to make sure you're donating to a 501c3. Last thing I'll say is a lot of people make the mistake of donating to 501c4s. And here's why. Planned Parenthood, Black Lives Matter, a lot of these advocacy organizations or organizations that have an advocacy counterpart, they'll have a 501c4 that contributes to lobbyists and things like that. Donations to those are not tax deductible. So that's why we always tell people donate to a qualified charity, go to the IRS website, and the IRS, you look up the charity, it tells you right when you look it up, this organization can receive tax deductible donations. You want to make sure that, because a lot of people donated to Black Lives Matter. Guess what? Some of those chapters are 501c4s, not 501c3s, not a tax deductible donation. So that's just why I wanted to throw that in.
Man, we should have started with that, because that's a mind blown. I literally thought if you had 501c, then from 1 to 25, that any donation is deductible, but no, it isn't. And okay.
Yep.
I guarantee you, I don't think too many people knew about that one.
Okay, well, now you know. Now you know. So don't be donating to these advocacy organizations or these chambers of commerce. I mean, do it, but no, do it for your heart. You're not getting a tax benefit. And
so the way to verify, so the way to verify is to go to the source, irs.gov.
Right.
And if we search in the search box, is there a specific term? Is there a link that we can go to?
Yeah, so I usually just Google IRS Tax Exempt Organization search. Okay, it'll come up. It's really user-friendly. You type in the organization's name, or if you know the employer identification number, EIN, you can put that in. Look for it, click on it. Right in the profile of the organization at the very top, it says organization is eligible to receive tax-deductible donations, or it'll say organization is not eligible. And then it also tells you if it's a public charity or if it's classified as a different type of nonprofit. It provides, and then you could find all their 990s, their information or tax returns. So it's really helpful. It's very user friendly. If that confused you, just ask your tax person or your tax friend. If you're my friend, don't ask me. I'm gonna make you do it yourself. Some other tax friend to do it for you. It makes more sense. It's more important if you're donating large amounts of money, right? If you're donating $100 and you make well into six figures, if you find out it's not tax deductible, you're not going to be too sad. But if you're donating $10,000 to an organization, you want to do it from your heart, but you do also want that tax benefit. So, yeah. Okay.
And to be clear, most churches and religious organizations, they're automatically something that if you donate to, it's deductible.
Yeah. Yeah.
Okay.
You want to make sure it's a legit church, though, like Kanye Sunday service. Mm-hmm. I don't know if that's a legit church. I don't know.
But they sing gospel.
I don't know. So if you gave tithes at that church, I don't know if it meets the qualifications of what the IRS considers a church.
Well, so it's not on the IRS website?
No, our churches don't have to file a tax exempt application. They should.
That's part 5.
That's we'll get there. But I just wanted to say that example. So, if you're part of a cult or something, it might not be tax deductible.
Wow.
So I'm not saying Sunday service is a cult, but I'm just saying you want to make sure you're at a legit church. It has a pastor. It has a qualified religion, or I say pastor, but the whatever is at a temple or a mosque and stuff. So, but generally, church donations to church and religious organizations are tax deductible. They fall under 501c3.
Oh, automatically. You said they don't have to do an application. Like I said, that's going to be part 5. We'll talk about that later. Yeah. Wow. Yeah. Okay. All right. Well, man, again, I thank you so very much.
Thank you. This is great. This is fun.
Y'all, make sure if y'all getting love, y'all leave it in the comments. Let her know just how much we appreciate the knowledge that she has shared with us on today. I'll make sure that I put a link to her website, Little CPA, where she drops all kind of jewels and nuggets right there with her blog. Look you on Instagram, right at the same, Instagram.com/Little CPA. And when sometimes she be dancing for us too, right? Like she'll get on there and she'll be grooving. Yeah, the dancing CPA.
Yes, I'm a trained dancer for 32 years, ballet, tap, jazz. So when they started saying, "Oh, you got to dance for these reels to get followers," I'm like, "Bet, okay, I got it." But then sometimes I think people don't be taking me seriously, so I don't do it like I really want to. But
absolutely, man. Well, again, we so much appreciate you being here. I do learn so much. I'm gonna replay this a few times just so I know what to go back, Google, look up, put the links, try to do as much as we can here. But yeah, any last words you want to say to the family?
No, this was great. I loved the questions. You really broke things down, and I hope it was helpful to everybody.
Oh, man. No, you broke things down. I asked the question. You the one fed us. Yeah, so no, we good. Thank you. Yeah. Thank you. Yeah.
Okay. Say bye? I don't know.
Yeah, we just say bye. That was it. We say bye.
Okay.
Yeah, then we fade out from there. All righty, family, that was it for that video. Man, was your mind blown like mine was? Special thank you to the Little CPA Sri. We appreciate her coming through and sharing that information with us. I know, or at least I hope, you got some good, valuable information for that. And if you did, again, make sure that you say something in the comments so I can make sure that she sees the love and support from the family, as there's always something good. And I ask that, you know the deal, right? If you got value from this video, make sure that you hit the subscribe button. Make sure that you give it a thumbs up, hit the bell icon, because this is the kind of thing that happens on the Self-Employed Tax Guys YouTube channel. And as always, I appreciate you being here. Thank you for joining me. Again, thank you to the Little CPA. Make sure to go on social media, show her some love, show some love in the comments. And until the next time, guys, know that I love you, and I will see you in the next one.